if you could just get an insight of what happens in the background or in the BTS, as they said, behind the scenes, you'd know how much trouble we go through to put this content out. We had so many difficult technical issues that we're trying to figure out, but we managed to do it. Thank you very much, Bud, for joining the podcast. Welcome to Something Nice with Dinano. It's a pleasure having you, a man of many talents, an artist, an activist who is really passionate, I would say, about the issue that he's, what do they call it? He keeps writing about, he keeps raising awareness about, and you call yourself a public finance activist.
Yes.
What is that all about?
So, well, first of all, uh, thank you for having me on the show, Dinano. It's really, uh, really grateful for you giving me the platform. Um, yeah, public finance activist. What I do is basically raise awareness of the benefits of um, government spending and employment, of productive employment of people, and and the possibilities that there are economically, financially, for the country in terms of job creation, in terms of financing the things that we need as a nation, that our people need, and like the essentials that people aren't getting at the moment because of the poor understanding of how economies and financial systems work. So what I do is try to just raise awareness of how the system actually works and what's possible.
In your opinion, buddy, what are those essentials that the people are not getting?
There's quite a few, but I think essentially one of the major kind of stumbling blocks is misunderstanding about what taxation is, and what government spending is and how that whole thing works. So basically, there's a very broad misperception out there in the public that what that government spends the money that's being taxed, and actually that's not true. And once we realize that the reality of what's happening with the financial system, um, which is basically that when government spends, it creates new money, um, and that when government taxes, it destroys money that's been created already. Um, and once you understand it like that, then you realize the possibilities in terms um, of you know how much government can spend, what the limitations of government spending are. Um, basically, also you understand better what taxation is for as well, because taxation isn't for funding government spending, because it's the money that's being taxed is being destroyed, so it can't fund spending. What taxation is actually doing, it's useful still, and it's still essential thing to have. But taxation is actually useful to control inflation, more specifically demand pull inflation, because what happens is with taxation, because tax destroys private sector money, demand gets reduced in the private sector for goods and services. People have less money to spend, so that's useful to control not only inflation but also inequality, and also to influence people's behavior.
I want us to just stress to the viewer that the reason for this talk is the World Bank loan that has been approved to South Africa on Friday, right? Friday the 21st. I heard about the story on Friday morning. I think I was listening to SAFM. Then I caught an interview in the afternoon where one of the hosts there on the station was interviewing an expert, finance or business, whatever they call them, expert who works for Alexander Forbes. Can't remember the name of the guy, but he said something to the effect. Now, what we're talking about is South Africa getting a $75 million loan from the World Bank, right, to help with
Seven
the
750
recovery.
million, I think. I think it was 780
Yeah,
or
70,
something.
750 million. Thank you.
Yeah,
$750 million because it's 11 billion, right? About
yeah.
11 billion. And it's supposed to help with the recovery plan from COVID-19. And I picked up on you whilst I was going through some tweets on the matter, and you had some strong views on that particular loan. What is your issue, if that's the correct way of putting it, with this particular loan?
My issue is how the whole thing's been framed as if that money is going to be spent inside South Africa to stimulate the economy and um, you know recovery from the whole COVID thing. And actually, it's impossible for uh, the forex to be spent in South Africa. So when South Africa takes a forex loan from a country, the money never actually gets into South Africa. The forex stays in the countries of origin. So if it's the dollar loan, for instance, the the, the dollars will stay in a bank account in the US, and actually can't be spent in South Africa. Government doesn't spend dollars in South Africa. If you get paid by someone in South Africa, you get paid in rands. The government is the same. They don't pay in dollars here. So um, the only thing that it can be used for, uh, a dollar loan can be used for, is to pay for imports of things from that country, or to pay off debt that's already exists, like forex debt that is already existing, or to pay for investment outward from South Africa. Um, or just basically, um, you it's those things. Anything that's kind of payment outwards from South Africa, you can use that. Um, so the government's been when we took the IMF loan a year ago, the government framed it as if that money was going to be spent inside South Africa to stimulate the economy, and it's basically impossible for that to happen. Um,
So where's the money
so
being spent, buddy? What are we missing as the
so
greater
what happened?
public?
What happened to that money was it actually ended up just being put into the forex was put into it was Treasury took a forex loan, which was deposited into Treasury's account at the South African Reserve Bank's account in the US, and um, then the South African Reserve Bank actually bought that forex from Treasury with rands that the South African Reserve Bank actually created. Basically, if you want to say, printed the money. They bought that. They created those rands to buy the dollars, and um,
So
and
you're
then the
saying
government,
our
and then
Reserve
the
Bank
government,
did actually print the money
yeah, when the Reserve Bank
locally,
pays, when the
even though
when
it
the
hasn't
Reserve,
got the money?
exactly. Well, the Reserve Bank. So now the money got. So when the Reserve Bank bought the money from Treasury, the forex from Treasury, that forex was transferred from Treasury's account to South African Reserve Bank's account in the US. So now, um, but now, what happens? What the end result is that Treasury owes the World Bank and owes the IMF, um, and the South African Reserve Bank has bought that forex from the from Treasury, so it's sitting in the South African Reserve Bank's account, and then um, Treasury ends up with rands that South African Reserve Bank has created, and then Treasury can spend rands onwards, but the forex is not being spent in South Africa. So that if you want to know what the loan was for, you have to follow what happened to the forex, um, and that's another thing entirely that we'd have to work out. But um, the, 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 the whole thing is that in order for Treasury to spend rands into South Africa, it could have borrowed that money directly. The South African Reserve Bank is creating that money. It's creating the rands when it credits Treasury's account. It's creating the rands and just crediting Treasury's account with it. Now,
So my
Um,
question would then be, why can't we
yes.
just mint or print the money and give it to Treasury as a
Well, that's the thing.
stimulus of some sort?
Well, that's the thing is, Treasury could end up, instead of ending up owing forex to the IMF and to the World Bank, Treasury could just owe rands to the South African Reserve Bank. The South African Reserve Bank would have a loan agreement as an asset with Treasury. So it's in the same way that the IMF has an asset of the loan agreement with Treasury. Um, so basically, the South African Reserve Bank would expand its balance sheet on both sides, and assets and liabilities. The liabilities are the rands that it's deposited into Treasury's account. Its asset is the loan agreement that that Treasury's agreed to pay the South African Reserve Bank back that amount, and then there's no problem. That's it's a normal banking operation, and there's nothing stopping South Africa from doing that. There's nothing stopping the South African Reserve Bank from lending directly to Treasury at whatever interest rate it wants to. And we could be paying at 0% for that stuff. There's no reason why
So
we need to take on a forex loan, which is extremely risky. Because South Africa can't, the government can't create dollars. It can create rands, and so it can never default on rands. Um, and if the rand gets weaker, if you have rand denominated debt, then you have less to pay off. If you have dollar denominated debt and the rand gets weaker, then you end up with more to pay off. So you end up having a big problem.
so why do we keep going this route? Why do you think is happening in the background that we are not being told about? Because I think even the conditions regarding the loan have not been disclosed, and I think the EFF is calling for that. What are the conditions? And as I had said in the beginning, when I heard this expert on the radio, he said, "What's $11 billion to a 3 trillion rand debt?" So it's a drop in the ocean. And he also said that the conditions are not that stringent. I'm thinking, is this guy for real? And I was a bit disappointed with the guy who was interviewing him because he didn't probe him on what these conditions would be for him to
Mm.
say they're not stringent when he's not even giving us the details on the conditions. Why do you think they have to go through this route instead of getting the money from the treasury in rands? Sorry, the treasury getting the money from the SA Reserve Bank in rands. Is it an inflation issue?
There's no reason. I mean, it's actually more inflationary to borrow in forex. The borrowing from your reserve bank is not really inflationary, because you end it, as long as you're spending the money productively, um, then you're going to have growth. If you what the thing about money creation is that as long as it's funding productive investment and employment, then you end up with an increase in um, goods and services, or even energy if you've invested in that. Um, so you have an increase in supply of goods, services, energy, and so the money supply is increasing, but also the amount of goods and services and energy is available is also increasing. So the price, you end up getting growth with low inflation, um, which is what if you want to have a successful economy, that's what you want to have. If you think about what happens when you borrow forex, and all the hyperinflationary episodes in the world in the past have all involved borrowing forex, like whether it be Zimbabwe or Weimar, um, or Venezuela, Argentina. What the primary kind of cause of it all is taking on a huge amount of forex debt. Um, in Weimar's um, the case, that was imposed on them by war reparations, but that you if you have a large amount of forex debt and you don't have forex reserves, and then you lose your income of forex for some reason. For instance, in Zimbabwe, they took um, they took these massive forex loans, and then they didn't spend it productively. They bought weapons and things like that from overseas. Because forex, you can only buy things from overseas. So the Zimbabwean government bought weapons and Land Rovers and all this kind of stuff for the army, and they had a war in the Congo for diamond mines and things like that, and they ended up having a severe forex shortage, and then at the same time they were imposing these austerity measures, and the economy was tanking. So were under like enormous political pressure, and they ended up doing the land reform program, which destroyed their local production of tobacco and food, which was their main export. So they ended up with a very severe forex shortage, and they owed all this forex, and they had no income in forex. So that's what ends up causing hyperinflation. The same thing in Myanmar. They had this massive war reparations that Germany had to pay after the First World War, and the French annexed the Rhine region, which was the main production, like industrial region of Germany, and Germany's export income was destroyed, and they had to still pay this forex debt, which they couldn't, you know, they couldn't create the forex because it's not their sovereign currency. So they ended up printing money to buy forex to pay it off, and the more they printed, the weaker their currency got, the more they had to print. It's just like almost like a feedback loop, and you end up with money that's completely worthless. The same thing in Venezuela, where you had massive forex debt, and then the petrol price tanked, and they weren't earning forex anymore from their fuel, the main export. And
So,
the thing is, now what we're doing when you're talking about inflation risk and we're talking about risk of hyperinflation is like we're taking on a forex loan, and you're saying, well, we're doing that because we're trying to avoid inflation. It's completely rubbish. I mean, that's we
considering what
actually.
you're saying, though, considering what you're saying about these countries, would you say then it is better for the Treasury to get a loan in the currency of the state
Yes,
instead of getting it in forex?
yes,
So if that's the case, why aren't
yes.
governments, third world countries, so-called developing countries, why aren't they doing that? Why do they feel beholden by the World Bank, the whatever the BRICS Bank is called, and the IMF?
It's a great question. I mean, that's a question that I've been trying to figure out. I've been studying this for years, and I've never. I mean, the only it's always you always get these reasons. Oh no, because the capital will freak out and they'll pull. People will pull their money from the countries if the governments are borrowing from their central bank. But the same countries that are that they're talking about, like if you think of the main investor countries, whether it be the EU, UK, the US, Japan, all those countries they're doing QE, which is like a form of the central bank buying government debt, and it's so you're getting all these first world countries are just they're allowed to do this kind of thing somehow, and nobody freaks out about it, and then the argument is that if we do the same thing, those same people who's who's got their money from that QE that the central banks are doing are going to pull that money out because they're going to be somehow going to be freaked out by the fact that we're funding productive investment in South Africa, and if that's and for me that doesn't make any sense, because what investors are really worried about are the things that if we did actually finance it, like for instance, if investors were worried about crime in South Africa, what we could do is we could be financing more police, so we have a safer environment for investors. If investors are worried about education, like the education levels, we could be funding education so that there's investors they would want to invest in a country where that people are better educated. If there's a huge unemployment problem and it's causing civil unrest and stuff, that's going to scare investors away. So if the government employs more people, you have more stability, you get more investment. So this whole argument that they have, it's almost like a fantasy thing that's being presented to us as like, if you do this, this is what's going to happen.
Mm.
And to me, it doesn't make sense at all,
Yeah.
because, yeah, it's just
We're wrapping up now. I think
basically.
earlier you raised an issue on frameworks and policy frameworks. I could be wrong here because I'm not well versed in this department or in this area, but I've noticed in other industries, for example, in the tech space, when it comes to data laws and legislation, South Africa has a tendency of using frameworks or policy frameworks that are devised elsewhere. For example, there's
Mm,
a global data framework. I think it's GNPS or something like that. That was devised in the Euro region in 2016. Africa is working on its own, and it's based or loosely based on the framework provided by EU. And I think that could be the issue with our monetary policies. I mean, a good example is what we've just spoken about. The MPC of the South African Reserve Bank will make a decision on whether to hike or to keep or to lower the interest rates sometime, I think, on Thursday or Wednesday. The Fed, the American monetary committee or whatever it's called, is
mm.
meeting, I think, tomorrow and Tuesday. So they'll make a decision by latest Tuesday or Wednesday. So why are we looking outward for African solutions, or are we bound by our colonial masters to always follow what they are doing?
Yeah, it's a very strange thing. I mean, I can't understand it. If I look at the argument for having high interest rates, so when the Fed hikes its interest rates, then the South African Reserve Bank tends to do the same. And the argument, and it normally keeps the interest rates a few percentages higher than whatever the Fed rate is. Um, the the logic is that they need to keep a spread so that it attracts people from overseas to invest their money into um, whatever interest-bearing assets there are in South Africa to get that spread. So what ends up happening is you have people in Japan and Europe and whatever buying financial assets in South Africa, and so there's an inflow of money into South Africa, and the rand gets a little bit stronger, and then that's because the rand's stronger than the important inflation of things like fuel. Um, the price doesn't go. The price can actually maintain itself. But if you think about the logic of that, what ends up happening is that you're offering them a higher interest rate, and it's quite a bit higher than it's like a few percentages higher than um, what it needs to be. I mean,
Mm.
um, what it is overseas. Um, and so what's happening is that if you're paying 10%, for instance, to on a government bond, um, then someone from overseas buys a South African government bond, and then we end up paying them 10%. And over time, what ends up happening is that the higher interest that we pay them, the more money flows out of South Africa in terms of the interest payment and the principal. So um, unless because now we're paying this high interest, and the money is going out on the current account in terms of the primary income, um, that uh, you end up over time, you end up with this outflow of rands, and then you have to now you're sitting in a worse situation because you've actually now the rand's weakening. Now you're in the same situation. Now you need to borrow again to keep
Mm.
the rand where it
Never
is,
ending cycle.
and
Never
then
ending cycle.
so
Mm.
you keep putting this interest, and so you end up as a nation you're paying this like premium to. It's like a lot of percentage that you're paying on it's on literally on trillions of rands, And that's like, it's almost like a tax that you're paying as a nation that
Yeah.
you've just decided that you're going to pay, and it's all because you're just refusing to fund stuff using your own central bank, which is what those countries are doing. Those countries that we look up to, they don't borrow their
Mm-hmm.
money from overseas. They do the stuff themselves,
Yeah.
and because we've chosen to do that, we're in this never-ending kind of loop where we're paying this interest, and because we're paying this interest out, the rand gets weak, and now we need to borrow more, uh, or sell assets,
So to
or,
compensate.
and it's like we we're being screwed basically. And
Yeah.
what needs to happen is we need to start going, okay, listen, what is the reason that we're doing this? Okay, if it's the fuel price, then we go, okay, what can we do to to uh, to wean ourselves off this imported fuel? You think, okay, well, we're in the stage of the world where we've got electric vehicles, we've got solar power, we've got wind power, we've got
Biofuels, hydro.
we've got
Oh,
we've got nuclear
different
power.
types.
We've got a lot of we've got coal even in South Africa, which is a bit of the
Mm-hmm.
dirty fuel. I'm not advocating for that, but there's a lot of different options. I mean, because petrol is also not clean fuel, and we're doing that at the moment.
Mm-hmm.
So what we could be doing is saying, listen, we're importing 250 billion a year worth of fuel. What if we spent 100 billion um, investing in a electric car, a local electric car, manufacturing that? There's a lot of experts in the car industries from South Africa. We could get them. We could get engineers. We could employ university graduates that are out of work at the moment. Tell them, listen, we set up this company to build electric cars. We set up companies to build uh, uh, solar energy productivity. We built capacity for other energy productivity. And then what ends up happening is within maybe a decade or two, we end up with we're not reliant on importing fuel anymore. And you say, okay,
Mm-hmm.
well then, so then what's then you don't have this problem of. So that's the thing of becoming. The main thing that we need to do is become sovereign, and that's like
Yeah.
energy sovereign, monetarily sovereign, and we're not reliant on these other nations, and we need to really like have a plan to do that. I don't see that happening at the moment. I see plans that are basically set up to benefit foreign nations, and it bothers me. It makes me wonder why we're doing that, and if our leaders are actually on our side, or if they're on the side of someone that's kind of influencing them.
But let's keep talking about these things, man. Thanks for the opportunity. It's been really fruitful. It's very interesting to find that someone who you'd see on stage playing a saxophone from for one of the country's best jazz artists have such interesting views on the economy and such things. And I've learned a lot from this talk. I know it was supposed to be 20 minutes, ended up being about 45, but it was worth it. How's the music scene? How's everything going? I think COVID really messed around with you guys. I remember I saw one of your concerts with Umandisi. By the way, Ubadi plays with Umandisi Janchis. He's the saxophonist there. You see him on their live performances. I think you guys were looking forward to the jazz festival in 2021 or 2020. Didn't happen. How has everything gone on that side, on the music side?
Yeah, it's starting to open up now, and hopefully the restrictions will all get lifted soon. Um, but yeah, it's not quite back where it was before the whole COVID thing hit, but we're definitely doing a lot more gigs now, and I've just actually opened up a, a jazz club and a studio in Bree Street in Cape Town. It's called the
Great.
Heritage Studio, and
Okay.
the jazz lounge is called the Blue Room. It's in conjunction with the Grub and Vine. Um, so I'm doing the music side of that. The Grub and Vine's doing the food and beverages. So it's
Okay.
really good quality food and beverages, and the music's
Send us
great.
the
So if
link
you,
and we'll link it
yeah,
below here
come
on the
come through to
description.
the blue room and enjoy the music.
Uh,
It's good.